Kilborn from Unanet. We'll be getting started in just about 30 seconds. Well, good afternoon, everyone. Thank you again for joining us today for Unanet's latest webinar titled DCAA Audits Without Tears. Again, my name is Donna Kilborn, and I'm the AVP here at Unanet for Customer and Partner Success. And we're delighted to have you here with us today and to have you have taken the time to join us. So we just have a few housekeeping things to take care of before we actually start the webinar. I'd like to let you know that we'll be sending each of the registrants, a copy of today's slides, a recording of the webinar, a link to the recording of the webinar, and several other resources that will be mentioned in today's webinar. And we will do that after the conclusion of the webinar. So let's get started. So our speaker today is Amy Hernandez. Amy is a principal with Strategic FAR Advisors, LLC, who is a Unanet partner. They are based here in Northern Virginia. Strategic FAR Advisors provides a complete federal procurement consulting solution, including services related to DCAA, DCMA, GSA, audit assistance developing adequate accounting and business systems, including policies and procedures, for government contracting, litigation support, and many other services. Prior to joining Strategic FAR Advisors, Amy was the Director of Government Compliance for Balfour Beatty Construction, where Amy and her staff were the principal points of contact for DCAA and DCMA issues. Prior to joining Balfour, Amy was a Senior Manager in the Business Consulting Group at R.G. Wilsey Robinson, which is now part of BDO. And before R.G., Amy spent 8 years with DCAA in a variety of positions at the field audit office, regional office, and headquarter levels. Amy earned her JD from George Mason University School of Law, a BS in accounting from Park University, and she is a licensed CPA for the Commonwealth of Virginia. So welcome, Amy.
Well, thank you very much, Donna. So without much ado, let's just get started and talk about how we can get through DCAA audits without bawling our eyes out. So just a little overview of what I'm going to talk about for this next hour. First, I'm just going to, talk about what is the DCAA. And what are their audit rights? What kind of audits does the DCAA perform? Then I'm going to also talk a little bit about the 2017 NDAA and some current trends that we're seeing within DCAA and what audits they are currently focusing on. So in the short term, what audits might be coming up for your company with DCAA. And then we're going to get to the meat of it, how best to prepare for and navigate DCAA audits. And then we'll wrap up with how Unanet can help you meet these goals as well.
So to get started, we're going to go ahead and launch a poll question so we get a basic understanding of who we have with us today on the call, and that will help Amy guide some of her further discussion. So we'd like to go ahead and launch today's first poll. Okay. Looks like we have a good mix, and looks like we have 47% of you are in the 5 to 10 million in the revenue category. We got about 20% in the 10 to 20, and then the biggest winner here is over 50 million in revenue. We have over 30% of you in that category. So thank you so much for answering that poll. That will help us.
Okay, so it looks like, we have some that are, companies that are more established and quite a mix with some that are maybe newer entrants to their respective markets. So let's just talk a little bit of background, just very high level on what is the DCAA. The DCAA, or the Defense Contract Audit Agency, was an agency that was established by the DoD specifically for the purpose of performing contract audit services and providing accounting and financial advisory services in connection with DoD contracts and subcontracts. So the agency was originally stood up in the mid-60s, and so it's been around for quite some time now and has undergone various transformations. throughout the years, but their mission has not changed. DCAA does also furnish contract audit services to civilian federal agencies when it's determined to be in the government's interest. So these are agencies like maybe like NASA or Department of Energy. They used to do a lot of audits for, you know, just Department of Transportation, various civilian federal agencies. But their mission and their charter is for DoD, so they are limited into how much audit work they can do for other agencies, so it's not to take away from the DoD mission. They also have a provision that they have to be within 18 months currency on their incurred cost audit backlog, and there was a period of time, as some of you on this webinar might be aware of, where they had a significant backlog. They were way behind in completing incurred cost audits, and so for a number of years, they actually could not do any audit work for civilian agencies. Well, they got caught up, and last year that was lifted, and they're now back doing civilian agency audits again. Currently, the DCAA has more than 4,000 employees in over 300 offices all over the world. They are headquartered at Fort Belvoir, Virginia, and they have 3 main regions because they just reorganized in the last year or so. That is roughly a western, a central, and an eastern region in the U.S., and the eastern and the western regions have audit cognizance for various other locations throughout the world. So all audits the DCAA does has to be conducted in accordance with generally accepted government auditing standards, and they have what's called the CAM, the DCAA Contract Audit Manual, that's available in its full text online on their website. And so that is the guidance to the auditor. This is not regulation for contractors, but it's the audit guidance, but it's very useful to read if you're going through an audit to know what guidance the auditors themselves are expected to follow. But first and foremost, it's very important to remember the DCAA is a strictly advisory body. They don't hold a warrant. They cannot sign contracting actions. They are advisors to the contracting officers. So it's very important to keep that in mind. The DCAA doesn't make regulations. They follow them. They conduct their audits in accordance with standards that are promulgated, and they follow their own guidance, but they don't make contract decisions. They don't have the warrant. So very important to keep that in mind. It's your contracting officer, your administrative contracting officer, that actually has the final authority to allow or disallow costs. So there's a lot of regulatory provisions that give the DCAA audit rights. The main one is the Audit and Records Clause, FAR 52-215-2. This is inserted into almost all contracts that are over 100,000 that are not for commercial items or utilities. It gives the government very broad audit rights so that they can look at your books, records, documents, other evidence, accounting procedures, practices, regardless of the form or type. So there are also a bunch of other statutes and regulations that will give audit rights. And here's just a listing of them. So, you know, you may have a firm fixed price contract that you'd never have to submit an incurred cost submission for, but guess what? You have something called the TINA clause, or down here in the center of this, you've got the statute up there, Truth in Negotiations Act, or you've got FAR 52-215-20 and 215-21, requirements for cost or pricing data or information other than cost or pricing data. Those are the contract clauses that bring in the Truth in Negotiations Act statute up above. Those clauses, when you're submitting change orders, for instance, on your firm fixed price contract, and you have to certify that pricing, is granting the government audit rights with respect to what you're submitting. So just be aware that you might have a fixed price contract, but the government still could have some rights to get into the underlying costs for the prices you're submitting. So the net result is virtually every contract that exceeds the simplified acquisition threshold of $150,000 and is not for a commercial item or utility services grants the government some level of audit access.
Okay, well, let's go ahead and launch our second poll question, which is, have you completed any type of DCAA audit previously? And this will be followed up by a more specific question regarding the type of DCAA audits that you have gone through. Okay, so it looks like most of you have gone through an audit. So let's go ahead and go to the third poll question, which is, go ahead and specify what types of DCAA audits you have completed. And this is a multi-select answer, so go ahead and check the ones that you've been through recently. Okay, we've got a lot of you have gone through incurred costs, of course, and pre-award. Okay, we'll go ahead and close the poll. So it looks like 65% have definitely been through a pre-award accounting survey. Provisional billing rate reviews, about 30% of you, which is great. Floor checks, 17%, that's on the time and labor, right? Incurred costs, 57%. Of course, most of you have been through that. And then forward pricing, 9%. So a lot of experience with the audits, Amy.
Excellent. So that's great. So we have a wide variety, and fortunately, those are the audits that DCAA is focused on now. So the presentation will be quite timely. Hopefully, I have some tips for you. So let's look at what DCAA can actually examine. And this is straight from the FAR 52215-2. You know, these are excerpts from that entire clause, but DCAA can look at books, documents, accounting procedures and practices, other data, regardless of type, regardless of whether such items are in written form, in the form of computer data, or any other form. All of the contractor's records, including computations and projections, and all records and other evidence sufficient to reflect properly all costs claimed to have been incurred directly or indirectly, to include inspection of the contractor's plans. So they can look at everything, right? They can look at everything, regardless of whether it's written down. That includes talking to people and getting information. They have the right to look at your information. So let's talk about the types of audits the DCAA can perform. It sounds like virtually everybody on the webinar today has had some exposure to one or more of these. I've grouped this slide in the contract life cycle. So pre-award, when you're trying to win a contract, post-award, when you're in the performance of a contract, and then after award. So in the pre-award phase of trying to win a new contract, of course, they can do the pre-award accounting system survey, which seems a number of you have gone through. They will also do audits of price proposals and forward pricing rates. So price proposals, DCAA does a number of different things. It could be a full price proposal audit, a full-scale audit. Those don't happen that often. Very often they might do a rate verification or rate check limited to information that's within their files. Or they might do an agreed upon procedures review, which is still might feel like an audit to you, but is a lesser degree of assurance for the contracting officer, a little bit faster turnaround, so not a full-scale audit opinion. And then forward pricing rates are audits where they will go in often for much larger companies that has a significant volume of price proposal activity. They will go in with and audit a forward pricing rate submission that's often good for 5 years at a time. And those will be negotiated then with your administrative contracting officer at DCMA. Post-award, when you're in contract performance, incurred cost submissions, internal control system audits, although they do very little of that these days, and we'll talk about that later in the presentation, but they do have responsibility for reviewing things like billing practices, full-scale accounting system reviews. So, and let's just be clear, an accounting system survey, what many of you may have gone through, is actually not a full-scale accounting system audit. It isn't testing all of the internal controls, but I'll talk about that a little bit. Estimating systems, purchasing systems, or components of the purchasing system, things like that are all considered systems of internal controls. They'll also have responsibility for post-award audits, or also known as defective pricing. These are audits that are testing for violations of the Truth in Negotiations Act. There aren't a lot of those done. DCAA frequently doesn't have the resources to do, and sometimes the ones that are scheduled are really scheduled based on a risk or some other sort of information. They also will look at equitable adjustment proposals or claims, and compliance with CAS, the Cost Accounting Standards and Disclosure Statement adequacy for contracts that are subject to the CAS. After the contract is completed, the most common audit is the contract closeout, which DCAA will often do as part of their incurred cost audits. They will close contracts as part of that audit for those that are physically complete. Or in the unfortunate case of a contract termination, either for the convenience of the government or for default, DCAA will conduct an audit of the termination settlement proposal. So these are the systems audits that DCAA has responsibility for performing. So there's 10 of them up here. And if you go to the Contract Audit Manual, you will see that all 10 are listed. But if you go to the DCAA website and look up audit programs, you will only see audit programs for Material Management and Accounting System down the bottom, Estimating System. You'll see some timekeeping or labor floor check interviews, so that falls under Labor System. That's a component of it, as well as the Pre-Award Accounting System Survey, but not the top-level Control Environment Overall Accounting System. So what does that tell us? Well, they still have responsibility. It's in their Contract Audit Manual. But there's no audit programs out there, and they're not really currently performing the other ones. They are still working on new audit programs for all these areas, but DCAA doesn't really have the resources at the moment to tackle much more than what's right in front of them and is the high priority.
Okay, Amy, well, let's go ahead and launch the fourth poll. Question on this poll is, what types of contracts do you work on? And go ahead and select the ones that apply. Okay, we've got about 60% of you that have voted or submitted your answers. Okay, so it looks like about 89% of you are working on fixed price, and about 59% on cost plus, and 67 on T&M. So we've got a really good mix.
Good mix.
Really good mix.
Good mix.
Okay.
All right. So let's talk about just a few blurbs about the 2017 NDAA. That's the National Defense Authorization Appropriations Act. So it's authorizing committing funds for various defense-related spending, and there's always rules attached to that every year. The 2018 came out of committee recently, and will be interesting to see what happens with that once it finally gets passed. But of note, as it relates to DCAA audits, there's a few things in that the 2017 NDAA that came out. So it specifies the creation of a new Defense Cost Accounting Standards Board effective October 1, 2018. And it will be required, its whole purpose is to recommend changes to the Cost Accounting Standards Board. And it wants to implement CAS to achieve uniformity on DoD contracts. Okay, but here's what worries me. You've got another board that, although it looks like it's underneath the CAS board, it could result in a difference in implementation of CAS standards between DoD and non-DoD contracts. So the DoD CAS board may recommend changes and go ahead and implement that for the DoD, but if you've got civilian agency contracts that are, that are also subject to CAS, they may actually have different implementation standards of the same CAS rule. So that's a bit of a concern. So we'll just have to see how that plays out, but that is something to be aware of. The CAS board, the DoD CAS board will have to meet quarterly and report to Congress on its progress to ensure CAS conforms to GAAP, generally accepted accounting principles. So it looks like Congress intended this to have some teeth, and we'll just have to see how that plays out. The cash waiver threshold was actually raised to $100 million for contracts. That's up significantly. So contracting officers or head of agencies will be able to request cash waivers for programs up to $100 million. There's also a provision in the 2017 NDAA about that companies may submit indirect rate audit results from outside CPA firms to the DCAA. You can imagine what the DCAA thought of this, but the CPA firms still have to comply with, quote, relevant commercial accounting and auditing standards that makes no mention of compliance with generally accepted government auditing standards the DCAA has to comply with. It doesn't give any guidance as to how differences with CAS and commercial auditing standards should be resolved. But it also says the DCAA doesn't have to rely on the audit results from outside CPAs if the company or business unit has a, quote, predominance of cost type contracts. I frankly don't think the DCAA is probably going to conveniently ignore this provision in the NDAA, but it's interesting nonetheless. So let's talk about some trends that we're seeing with DCAA. They continue to use a risk-based approach on selecting proposals for audits, and of course this is primarily due to their workforce. They are significantly undermanned, and so they are out of necessity using a risk-based approach to selecting which proposals they audit, particularly for incurred cost. Forward pricing, that would be all things related to price proposals and future costs. And incurred costs are still considered the highest priority areas. So forward pricing, of course, because Those are audits that are requested very often and are needed to award contracts. Lower staffing levels, continued lower staffing levels of DCAA means that they probably are not going to eliminate the incurred cost backlog in fiscal year 2018 as they had originally planned. The hiring freeze, of course, played into that, and they just aren't able to ramp up as fast as they wanted to. They probably are not going to completely eliminate their incurred cost backlog. The multi-year incurred cost audits, those of you that are going through incurred cost audits may have experienced a multi-year audit, that is where they do 2 or more years within the same audit. Those are likely here to stay. DCAA has decided they really like those for a variety of reasons. And so even though when they say they're going to eliminate the incurred cost backlog, it's probably still going to be, they're never going to be completely current with respect to the smaller companies. However, timeliness for their forward pricing audit reports, again, this is all pricing proposal actions, are still an issue. They are still at an elapsed days in excess of 60 on average, which is frankly hard for contracting officers to award contracts in a timely manner. So that's still a continuing lagging issue.
Okay, Amy, so we have our 5th poll question. I also, before we even launch this, I'd like to make sure everybody understands. Feel free to enter any questions in the dialog box, the questions box on your GoToWebinar dialog box, and we'll, if time permits, we'll try to tackle some of those questions. If not, we will get you those answers after the webinar. So let's go ahead and launch this 5th poll, and this one is: have you completed a CAS or systems audit? And go ahead and select the ones that you've done. Okay, we got about 60% of you have submitted your answers, and we'll go ahead and close the poll. Okay, so we've got CAS only audit, 9% of you, systems audit. We've got a lot, 23%. Those of you who have done both, 5%, and those of you who have done neither, 64%. So that's
kind of not surprising. And those of you that have had a systems audit would be interested if I wouldn't count a pre-award systems survey as a systems audit. Again, for the reasons I expressed earlier, a pre-award systems survey is really just an introductory overview of your accounting system. They actually don't test internal controls. So I'd be curious how many that answered they had a systems audit actually was just a pre-award. DCAA is not doing a lot of systems audit, nor are they doing CAS audits very much. And I believe that's really just a resource issue. Going into next year, and beyond, they really do want to get back to focusing on those areas. Their own resources and backlogs are probably going to prevent them from doing that, but I believe in the not too distant future, it is absolutely their intention to get back into doing more routine CAS audits and more routine systems audits. Doesn't seem like that long ago, but maybe 10 to 15 years ago, they actually used to do systems audits every 2 to 3 years for active government contractors, and DCAA really does want to get back to that. But for right now, given where they are, for at least the next 12 to 18 months, they're going to continue to focus on 3 main audit areas, and those are the incurred cost, pre-award accounting system surveys, and forward pricing, again, those price proposals. Unless DCAA is able to get its staffing above 5,000, it's doubtful that many of their business systems and CAS compliance audits are going to be performed in the next fiscal year. But again, I do know that DCAA does want to get back to that. So now is the time to prepare. So let's talk a little bit about each of those 3 audit areas that they're focused on. So the main thing, when a client gets a new proposal or an RFP out there, the first thing I look for them is FAR 52-216-7 in that? And what is that clause for? Well, that clause means that you've got to do an annual incurred cost proposal. So that's usually the first clause I look for. So just FYI, when you're reading an RFP, look for that clause. So you have a requirement to do an annual incurred cost proposal, and it's due 6 months after the close of your fiscal year end. So most companies have a December 31 year end, which means your incurred cost proposal is due to the government on June 30th of the following year. So what happens if you don't submit it on time? Well, very painfully, the government can revoke your provision of direct billing under the notion that your accounting system is not adequate if you can't produce a rate submission in a timely manner. They can also issue what's called a flash report. And this is a report that says that your accounting system is inadequate and it could limit your ability to obtain new contracts. So, and they issue flash reports on any of the internal control systems, which is one thing that they are doing. So in the course of a price proposal audit, for instance, they might issue a flash report on estimating practices. While they haven't done a full estimating system audit, they might note that the way you put some of your estimates together is non-compliant, and so they may issue a flash report regarding that. So what information do you need to prepare this incurred cost proposal? Well, the first thing I would say is DCAA has an Excel-based model freely available on their website called the ICE model, or Incurred Cost Electronically. It's not a perfect file. It is a little bit buggy, but it includes all the required schedules. So it is a good starting point to at least verify that you've included the necessary information. Well, what do you need to populate this model? Well, you need your detailed indirect rate calculations. And by detailed, I mean, you know, your full statement of indirect rates, all the costs in the pool and the base by account. You're going to need individual project cost ledgers for all your contracts. This would be your cost plus, your T&M, and fixed price, including government and commercial contracts. And this is for completing your big Schedule H, the meat of the submission. You're going to need your subcontract information, including all the costs incurred in the current fiscal year. You want your prior year submission. It's a lot easier to do your current year submission if you've got your prior year. It takes a lot less time. And your contract billing information. You're going to need this to calculate the amount you're over under billed on your contracts. And then a summary of hours and amounts by labor category on your T&M contracts, as well as your quarterly 941 tax returns so that you can reconcile your labor dollars to your payroll amounts. And then you need to also just note any accounting or structure changes reported during the year. This is required to, even if you have none, you have to absolutely state that there were no changes. And then contract briefs are helpful in preparing. You don't always have to include them with your submission to the government. They can get that during the audit. So let's talk about pre-award accounting system surveys, because they are still doing that, and it sounds like a lot of you have had that. So what's the general requirement you have to have? You need to have a system that conforms with the generally accepted accounting principles, or GAAP. And that would mean you need to be on an accrual-based system, which all of you should be, but I do occasionally run into companies that are entering the market and still for some reason have a cash basis system. It needs to produce equitable results that can be verified. And it's applicable to the contemplated contract. So if you have all fixed price contracts, you know, the design of your system and how you track your costs doesn't have to be the same as if you have cost plus contracts or a mix of contracts. And it also needs to be consistently followed, and this is key. You need to be able to follow your own procedures and processes that you put in place. You need to be able to do that consistently. But the pre-award accounting system survey is conducted in accordance with the criteria that are listed on Standard Form 1408. I'm sure as many of you have gone through that pre-award audit, you probably have had to complete the form. And in the old days, back when I was an auditor, it seems like years ago, we used to complete that form. Now the auditors send it out to the companies being audited and ask you to complete it. And that's a minefield, I will tell you. If you're not used to speaking in auditese, and I call it auditese because I consider it a separate dialect of the English language, they're looking for certain answers. And so my advice to you is to seek input from somebody that is well-versed in auditese just to write that form so that you run into less problems during your audit. But let's talk about the criteria on that form and what you're required to do. First and foremost, proper segregation of direct and indirect costs. So your direct costs in your contract are clearly identified in your chart of accounts and separate from things like your overhead and G&A and fringe expenses. You can identify and accumulate all of your project costs, your direct costs by contract. Your allocation of your indirect expenses, that is your fringe, your overhead, your G&A, is consistent in its method. And all your costs are under a general ledger control. You have an adequate timekeeping system. You have a labor distribution system, that is how the labor costs get distributed to the various cost objectives, like, you know, indirect labor and labor on contracts, paid time off, things like that. Interim determination of costs, that you can do this at least monthly, that you can determine what your indirect rates, what your true costs on your contracts are. So you can gather your job cost ledgers will show your complete costs. You'll have all of your direct project costs as well as what your actual fringe overhead and G&A are running, so you have a true picture of what your contract costs are on a monthly basis. You exclude unallowable costs. Those are the costs specified at FAR 31205, that those are identified in your accounting system and that they're excluded from your indirect rates and your direct contract costs. And if you have a contract that so requires, you can identify costs down to the line item level if it's required, and that you can segregate pre-production costs from production costs if applicable. Again, that would apply mostly to companies that have manufacturing contracts. Let's talk a little bit about forward pricing. Forward pricing refers to estimates for future costs. It's things like price proposals, forward pricing rate proposals, as well as provisional billing rates. I like to quote FAR 15408 Table 15.2 as a good reference. It's not often a required format, but it provides you the kind of information you'll need to price adequately for your price proposals, your forward pricing rates, and provisional billing rates. So let's talk about the vital elements of a cost proposal. First, you want a summary of your cost elements. If you have a contract that's going to require bill of materials, that you have a consolidated bill of materials, and that the types, quantities, costs are all on there, and that it complies with FAR 15408 Table 15.2. That you have a breakdown of your labor, hours, rates, and costs by appropriate category. That you have details as to how your indirect costs are computed, how the indirect costs are applied, what the cost breakdowns are, trends, budgetary data. You identify your other direct costs by category and have a basis. So very often in our hyper-competitive government contracts environment, you aren't going to have have a proposal that complies in all aspects with FAR 15408 Table 15.2. Your pricing worksheets that are handed to you aren't necessarily going to require all this data. I would submit to you that as company owners and management, knowing this data can help you make smart pricing decisions as well, because it's showing you what your true cost performance are before you enter into the contract. So it's a good idea to know this data inside and out, even if the pricing formats aren't exactly in this structure. So, and also know your rationale for your proposed profit. Know that on a lot of contracts, there's a guideline that applies within the DoD on profit levels. Depending on the contract, there is the way to guidelines out there. So have a clear rationale for your proposed profit. Proposed profit, is a required element if you want to make profit. We're not here, just to, do the government a favor. We also are in this to make money. So profit is not illegal, but there are guidelines for that, and make sure you have a clear rationale as to why your profit is reasonable. All right, so let's talk about why you're probably all really here today, is how to save your tears when you're going through an audit. And I'm here to say that a DC audit does not have to be a painful experience, but the key is being prepared. Have a strategic plan for your company. Know when you might be subject to an audit. Some of my best clients haven't even gone through an audit yet, but I am very confident because they contacted me 2 years ago. They are going to sail through it because they said, you know what? Down the road, we might want to do this. We might want to bid on a cost-plus contract, and we'd like to be ready now. It's a lot less painful and expensive to prepare now for something that could happen 2 years down the road, and you can take the time to do it right. So know your strategic plan. Know what markets you want to get into. Know what contract types you might be facing, and start preparing now. Because initial audit preparation can actually take months to get your system adequate, and in some cases a year or more, depending on the complexity of your system and the size of your business. So you want to start as early as possible and start with your strategic plan and where the direction of your company is going to help you make those decisions on where you should spend resources. So you want to also, understand that the purpose of the audit. So if DCAA is already coming in, know what the real purpose of their audit is. Know what the regulatory requirements are. DCAA is famous for veering off course, so know really what the purpose is and try and keep them to that purpose. So this is just my opinion on what a successful DCAA audit is. For business owners, it might be, well, they said we were okay and they didn't question all our costs. From my perspective, it's that, but it's also that DCAA performed their audit and applied their procedures consistently and correctly, that they documented their audit findings appropriately and it was presented in a clear manner to the company, and that the audit performance by DCAA minimized the impact to your organization. They were efficient, and you didn't have to spend an inordinate amount of time trying to support the audit. And of course, that there's no significant findings. So really, I mean, audits are going to be a fact of life depending on the nature of your contracts. And it can be a positive experience, but you want to go in eyes wide open and know what the DCAA is required to do, so that they apply their procedures, they're doing the audit appropriately and efficiently, and the impact to your organization is minimal. And the most important thing in my view is your audit liaison and who that person is. Choosing the right person to be your DCAA audit liaison is paramount. Now, DCAA prefers to interact with people internally to the organization, but sometimes, especially if you're a smaller firm or you're an existing established firm, but maybe you're new to government contracting, you might not have a person in the liaison role that is very experienced with DCAA audits. In those cases, I would suggest finding maybe somebody outside your organization to at least guide you through, if not also speak to the DCAA on your behalf to make sure nothing gets lost in translation. So, the key aspects that I would say that your liaison should have is a strong understanding of your company and its operations. Know the company inside and out. Know the timing, right? So know that what various departments do, know what various, where to find all the information they need, that they need to be knowledgeable about what your company product or service is. That's really very important. They're going to know where the details are. They're going to understand things and be able to translate that back to an auditor that audits all kinds of companies. They should have firsthand experience with DCAA audits, and this really just can't be overstated. Unless you have either done DCAA audits as an auditor or lived through them extensively and know the programs inside and out, there's just no replicating this. You really have to know what the DCAA's job is and what they should be doing and how they should be doing it. And they really need to be someone that keeps a detailed log of all the auditor requests and information provided. None of this can really be overstated. So let's talk about record keeping and documentation. You really want to understand the record keeping requirements of FAR 4.7. I probably should have inserted another poll here to see who actually knows what's in 4.7 and has a record-keeping policy, because this is really important. For 4.7 are your minimum requirements. That you may actually keep records for a longer period related to maybe any litigation you might have ongoing and things like that, and that's fine. But you want to have an adequate record-keeping system. And DCAA doesn't audit this as a standalone system per se, but they're testing your records within every audit that they perform. So you want to make sure that you have a record retention policy and that it complies with at least the minimum timeframes at FAR 4.7. And I would caution you to really go through that and look and understand, you might have some items that you keep longer for various reasons, IRS requirements and others, litigation, as I previously said, but you don't want to be holding on to things indefinitely. You want to also clearly identify what records you have available, where they're located, and make retrieval accomplishable in a timely manner. So those of you going through DCAA audits probably know that DCAA has really tight turnarounds on their requests for information. Some of them are ridiculous. But nonetheless, if it's something that they view that you should have readily available, you want to be able to access that information timely. 72 hours, not uncommon. I've seen some requests in 24 hours, and it's really because the DCAA is getting up against a wall and needs to issue a report and needs to get done. Not your fault, but at the same time, you're also trying to strike the balance and not have an auditor get really angry and frustrated with you. So to that end, you want to have your records retrieval something that you're able to get at quickly and that you can find what you need. Not so many years ago, DCAA was so far behind their audits that they might be looking at costs that were 5 or 6 years old. And that was a very big challenge. So these days, they're a lot more caught up. But if you're looking at a long-running contract, say, that is being closed out or was terminated, you very well could have some records that are going back some years. So the bottom line is, make sure your records are clearly indexed, available, you know where they are, you can get to them quickly, and that you're complying with the retention times that you say in your record-keeping policy. Because DCAA loves to nail people for that, but know what's in that, what's in FAR 4.7, make sure it complies at least with the minimum, but take a look at your business and see where you might need to adjust those timeframes, and then stick to it. All right, so entrance and exit conferences. Another area might have, wanted a poll question, but I'll just give you some of my plain experience in this area, both as an auditor and then for the last many years helping government contractors with their audits. You very often these days need to insist that DCAA hold both an entrance and an exit conference. For very simple audits, they might be conducted over the phone or with a detailed email conversation back and forth, but I would really insist that they open and close their audits with an in-person meeting. Entrance conferences are really important so that you understand on both sides what the scope of your audit is going to be and what information or persons DCAA believes that they're going to need to conduct their audit. That's going to set the stage for you to make sure you have the personnel and the resources and the information available in a timely manner. It's going to help DCAA be efficient, and it's going to minimize the impact to your organization. It also makes it clear what they're really doing, because maybe they're doing a pre-award survey and a price proposal audit at the same time, and they might be looking at something else at the same time on another contract, testing billings. So, you want to make sure you fully understand the scope. They actually could have 2 or 3 assignments running at once that you might not have been aware of. So entrance conferences are really important for that. Equally, if not more important, is the exit conference, particularly if it looks like there's going to be findings. You want to make sure that the company conducts an exit conference in person where they discuss any findings that they have. You want to make sure that they present a clear basis for the findings, and that's going to facilitate you being able to provide a timely written response, because your written response is included in the audit report and can be very important if there is a true disagreement on the findings that are presented to the contracting officer. So, and I will tell you that in several occasions, very recently, contracting officers or DCAA auditors have not wanted to conduct entrance conferences for some of my clients. And this is an occasion that's happened a fair number of times over the last, say, 4 years. And I've had to push for that to occur. And it's very dangerous, because reports will get issued to a contracting officer, and they will say that they've conducted an exit conference, and there might be findings in that report that you weren't even aware of that can present a later issue in negotiating the cost, whether on the Incurred Cost side or the price proposal side. And understand that on price proposals, the exit conference is limited to what they call, quote, factual information. So they're not going to give you a detailed list of their findings, but they will discuss factual matters with you that can give you a pretty good idea where they stand. On the incurred costs, on the other hand, those are incurred costs, so they are going to discuss their full findings and the rationale, or they should. Like I said, I've had instances where they have failed to conduct an exit conference, and I've had to actually call DCAA on their own internal guidance. They actually have internal guidance requiring this, and I've had to elevate it up through their branch manager, through their regional audit manager, through the regional director, and eventually I had to elevate it up to the headquarters level. And in each case, though I only had to elevate one to the headquarters level, but in each case, the DCAA came in and did an exit conference. And it was vital so that my clients could provide a timely, accurate written response to the findings that were going into the report, so that the contracting officer could make a fully informed decision. So I just can't overemphasize the importance of making sure that DCAA does those in person. One other thing you need to make sure you're doing is keeping DCAA within their audit scope. Don't let them wander. They're famous for that. They're famous for wanting to wander. When I was a young DCAA auditor, I had a supervisor auditor that just used to crack me up, and he would say things like to the auditors, listen, no biggie sizing allowed. Stick to your audit scope. No biggie sizing. And I will always remember that. But it's important for you as government contractors to not allow them to biggie size your audit either. You want to determine first and foremost what type of audit are they actually performing. Go and read the audit programs. They are publicly available on the DCAA website. DCAA puts them out there along with the MRDs, those are memorandums for the regional directors. Those are audit guidance, not all of which is publicly available, but those that are publicly available are out on their website. It's a great way to look at insight into, certain areas the DCAA is focusing on, any interim guidance. It's good ways to know what they're really going to be testing and what their rationales are going to be. You want to keep a list of areas that are supposed to be covered by the audit. Involve the auditor's supervisor or the branch manager if the auditor repeatedly goes outside their established scope of audit. And if you're not getting results with the branch manager, go to the regional audit manager. Go, keep elevating until you get a satisfactory result. I also caution companies, don't develop analyses or put together information that your company doesn't normally maintain. Now, if you have an already adequate accounting system, you should have, through the normal course of record keeping, adequate information. If the DCAA asks you to reformat something or do something, sort the information in a different manner, you don't necessarily have to do that. That is their job. I actually had a DCAA auditor request that a client of mine revise their one of the schedules on their incurred cost submission, not for that year and not for auditing the incurred cost, but to assist in closeout of certain task orders. No, that's really the DCAA's job, and don't do that for them. And also don't set a precedent by doing something like that. Just be very careful what information you provide them outside of analyses that you would normally, through your normal course of business, compile or maintain.
Okay. Okay, Amy, well, that was an enormous amount of information, very, very helpful. So we're going to shift gears just for a few minutes. Before we do that, I would like everybody to take a minute to submit a question. We have Amy here, and she can answer. We've got time to answer questions. So I'm sure several of you have some questions out there, and we can get those answered.
And we'll do it anonymously, but I'd love to have some feedback from you guys and answer, kind of on-point questions you might have.
Yeah, we'll look at the questions, and then Amy will answer them for all of you. But why don't you go ahead and do that while I talk a little bit about the Unanet solution. So Amy has been talking quite a bit about the different types of audits that you may encounter with DCAA. So for those of you who know Unanet, this might be a repeat. For those of you who are new, I wanted to just tell you a little bit about the solution, how this can help you with any of your audits that you might experience with DCAA. So Unanet is it's a full project ERP solution for government contractors and for any project-based businesses. And it's a full solution in that it takes you from the planning stage of an organization, from their planning stage for projects, where you can actually build that cost proposal and make it really easy to access and easy to have available in the event that you are doing any forward pricing types of audits. So in the planning stage of the Unanet solution, the features in that area, you have the ability to build cost proposals, to build and define all your opportunities and track them, to basically craft your budgets for the year, yearly budgets and ongoing reforecasts of those budgets. And then based on any of those scenarios, you can compare which scenario, which cost plan you might go forward with in an actual proposal. All of that information lives within inside Unanet, so that when you are finally awarded that contract, and we are going to finally award it, you can simply take that cost proposal and the full work breakdown structure and basically convert it to a project with a simple transfer of that project's status. In addition, in the planning stage of Unanet, you have the ability to search and identify resources that may meet the skill sets required for that proposal. Not only skill sets on hard, technical skills, but also experience and past performance and rates and locations and things of that nature. So you have at your fingertips a full tool that will help you develop a cost proposal, estimate the cost of a project, and have it live inside a single solution once you then get awarded the contract and you move to the execution side. On the execution side of the project lifecycle, this is where you have the basic time and expense tracking, all the cost proposals, all the approvals for those timesheets and expense reports. This is where you have invoicing and billing and revenue recognition, where it will support all of the major contract types. On the fixed price side, we'll give you several options on how you can recognize revenue, whether it's on a % complete basis or other. So you have all of that with all the formatting and invoice formatting required that you might need for different types of agencies and customers. There's also the ability to track all of your actions and activities, contacts with your customers, and frankly, your whole ecosystem, whether those are your suppliers, your subcontractors. You have a full solution to track all that contact information, as well as a tool inside Unanet to track your relationships with your customers, so it's CRM. Moving to the purple side of the project lifecycle, you also have the core accounting. This is where your general ledger and your AP, AR lives. This is where your indirect rate calculations live, where all your cost pools are defined. This is where your statement of interest rates is available. So this is, again, all your reporting and your core financial components of Unanet, all there to support the requirements that Amy had outlined before in an adequate accounting system. And lastly, you have the optimized area of the Unanet solution. This is where you have all your dashboards, management dashboards, project dashboards, all your KPIs and metrics, all there to help any level of the organization, from the CEO to the program manager to the budget analyst to the CFO, all there to track key metrics to run your business. So basically, you have a full solution. It's one solution, one database that you can use to run your business. And it's all there with real-time reporting. So Amy talked a lot about the access to information. There really isn't any issue with accessing information if you're using a solution like Unanet, because it is all there in real-time reporting and any of the reporting and dashboards that Unanet provides. One other slide that I'll share before we get to questions, and that is two other slides, I should say. One is a case study, a customer success story by one of our clients who moved to the Unanet financial system and quite a while ago went through a 1408 system survey and came across a flying colors. You don't need to worry about reading this. We will be sending you this case customer story, this case study on this particular type of audit following this webinar. But again, all of the different aspects that were reviewed in the 1408 were handled beautifully and easily and quickly in this particular 1408 system survey. Okay, and lastly, I will mention a few things, again, to piggyback off of what Amy said. Within Unanet obviously has all of the DCAA support guidelines in it. It's part of its native solution. And those include things from timekeeping guidelines on password controls and restrictions on charging in advance, and audit trails on changes to timesheets, all that basic information, but as well as all of the data required for your ICE, your incurred cost submission, an ICE workbook, and Unanet provides a process, and I'm giving you just a thumbnail view of that process for how you can generate your ICE workbook through Unanet reporting. So that's available to you as well. And there's a full setup in Unanet for how to comply with DCAA and all the different properties and guidelines to set when you first